Goldbach and the Bitcoin rabbit hole. So, as ICT says, ICT's concepts work across all markets. And because I believe, and the evidence is mounting, Goldbach is what ICT really uses. Obviously, Goldbach works on Bitcoin. So I'm going to go through a trade I took with someone on one of my groups. I wasn't going to trade over the weekend. Spreads aren't great on Bitcoin. I don't recommend you try trading Bitcoin on a funded account for these scalps that I do. If you're holding for like a day or something like that, then the spreads don't matter so much. But for scalps, it's not great, but it was a fun trade to take. So I took it. So let me break it down for you. So I was just chilling, doing my reviews, and I got this message. Right. So he was showing me this chart. The dynamic range, the Goldbach range was the 243, and he says, "How would you read this?" And I replied. So let me just show you the chart. So this is what he was seeing. I assume he's looked at my work, so I assume he was seeing an order block here, right? And my reply was, yes, you have an order block, but you don't know if this is going to be a bullish order block or a bearish order block. I would wait for some displacement to tell you which way to go. So what I'll do is I'll play out the candles as they were on the day, and then we'll go through the trade that he and I took together. And then I'll show you what happened after we TP'd. So the analysis I did very quickly, because the 243, I don't look at Bitcoin anymore. I used to trade it on the 2187. So you'll see some of my, I think I posted some of my wild trades on YouTube publicly on the 2187. So I wasn't familiar with the 243. So I did some quick analysis to confirm we were running on there. That is not enough for me. I need a lot more. So I asked him to check the other ranges as well, to see if there's any clues that we're running on the 243. And here we go. See how this 5-minute candle was respecting the bodies, were respecting the extension. Here's the price. So that's pretty close considering we're talking about Bitcoin. 27,000 is roughly the extension. And we were respecting it here on the 243. And then down here also, I showed him that we had touched the low, which is 26,730. And look, that's pretty close. So I was confident that Bitcoin was running the 243, but I still need more confirmations that we're actually going to run the algorithm. So at that point, I said, wait for the displacement, and then we can see what's going on. And this is how the trade unfolded. So we went down first. There was not much action. At that point, we had broken up. Now, there was a tiny fair value gap here. But what I asked him to do was look on the 5-minute. Now, on the 5-minute, once we load up, we had a lot more displacement. Now, the candles weren't exact, but they kind of aren't for Bitcoin. It's very rare that you'll have it exact. And I might actually post an 11-hour trade that I took as one of my first Goldbach trades where everything was perfect. And after I took that 11-hour trade and basically passed a funded account in one trade, I was hooked that there was something to Goldbach. I was still very new to Goldbach, but that was just proof for me. And there we go. There's our fair value gap. So this is how I came into the trade. Well, I placed the limit order here. So there's our fair value gap. Now, if this was EU, this is how I would have played it out. I would have put my stop loss here. But because of the spreads, I advised him to put his stop loss here and then take the trade. Now, my TP1 was here. So not the best trade in the world, 1.73. But considering it's a weekend, it's Bitcoin, and I hadn't been looking at Bitcoin, I thought this was pretty good. I also liked the fact that we had already swept these London lows, but we had not created a Judas swing for the day. So this could have been the Judas swing. And we also had an hourly liquidity here, which may be the target. So I didn't want to get caught up trying to catch the high. I said, let's have TP1 at the EQ. As per my video over the last few days, I've started TPing at the EQ if I don't think there's going to be a big move. Okay, so this would have been our entry. Now on the day, I had a limit order here, but it just wouldn't fill because of the spread. So I took a market entry. The entry wasn't great, but it was good enough to get me into the trade. Let me show you where I actually came in. So this was my planned trade if this was perfect. Well, if it was perfect, I would have put my stop loss here. But because of where we were, I put it here. Okay. Because my order wouldn't fill as a limit, I had to do a market, and the market filled me here, which wasn't great. That was my TP1, which you'll see later. But this is where I had my limit order. And just playing the candles through. I won't go down to the 5 minute because that's how we were tracking it. Because I don't want to make this video too long. But fair value gap, we got tapped in, and then we got TP1 straight away. Now let me find my TP1. Here we go. There's the screenshot. Oh, I haven't marked it out yet, but that's the M15 OB. There's the fair value gap. We hit it, and then we TP'd pretty instantly. Well, within the next 15 minutes, the next few candles. And there you go. I started TP at EQ as per yesterday's vid. Now, admittedly, ideally you would like to terminate here. But once we had fallen down here, I exited the trade because I saw that, look, now we have equal highs. 1, 2. I doubt it's going to get there immediately. I might get stopped out because it hit equilibrium, but it didn't take that H1 liquidity, which made no sense. It would only do that if it's creating equal highs. EQ is a target for the algorithm. Look how we played out. There was a second opportunity. And I'll mark it up with you guys. So it's respecting our order block for now. Still respecting the order block. The bodies are, but technically if we were here, we would have got tapped out. But assuming I'm no longer in the trade, got to be patient. Now we have, what do we have again? We have an order block. We have a fair value gap. Let's be safe because it's Bitcoin and it was the weekend. I don't know what actually happened, but because I don't look at it that carefully, but I would have come off maybe here. See, this is why later on I started using the actual GB levels as my entries and not the real fair value gap. Because look, we got tapped in, but only at the GB level, which obviously most people have no idea what a GB level is. So that's the GB level. That is where we went down to the fair value gap level, and this is where the fair value gap opens. So we're off a little bit, but it shows you that it really does use the Goldbach levels as opposed to the fair value gaps that are created. And it's also Bitcoin, so the price is a little bit off. This is why I don't trade Bitcoin anymore. But look at that. Look at that touch. To the dollar. So this is now an algo. So I wouldn't have got tapped in because I probably would have done it here because I don't trade Bitcoin. But the algorithm is running nonetheless. So what do we just do? We have order block, breaker, fair value gap, So we should terminate at the opposing order block. Let's have a look. Moving quite rapidly. Look at this. Look at how we're respecting things. You can see that there, right? Tells you we are running on the 243. And look how we respected EQ on this candle. So a little bit of liquidity being created before we terminate the algorithm. Bang. We are done. And look at these bodies. Oops. To the dollar. Look, we're off by 3 cents every time. 71, and this one was 31. So we're off by 3 cents. Now, we're talking about precision here. Are you okay with that kind of precision? Considering it's Coinbase, it's a Coinbase chart. Does that prove to you Goldbach is a thing? Right, we're off by 3 cents here. We are off by 15 here, I think. And we're off by 3 here. So what could you have collected? A 4.5 R trade. A 1.7 R trade. A little review, little bonus for you guys. Goldbach and the Bitcoin rabbit hole. It was quite fun when you trade with people. So I got a nice little heads up from someone on the group. Asked me a question, and then we took this trade together. I closed the charts because then I realized the spreads are not good enough for me to make this kind of money. But look, we had a nice trade here. You can find me on Twitter, but you're better off messaging me on the YouTube comments because they're a lot easier for me to find. We also had a nice little acknowledgement from ICT today. So Future Code found this in Twitter. Go follow my man Future Code. So it was one of my Goldbach posts. Now he wouldn't he wouldn't like the actual video, but he liked one of the comments on my video, which I posted. It's too easy. It's too much of a giveaway if he actually likes the video. But that's a nod from the main man ICT. And just some more proof that was ICT. There you go. If you want to go check out the video, it was this one. So there's a nice little strategy that I was messing around with on Saturday. So go check out this video. It's on my YouTube. And ICT is in there somewhere. There he is. We're getting close. We are getting close to cracking Enigma. It's a good, fun time for everyone in the trading industry. I get a lot of hate because people think I'm making Goldbach up, but that's all good. I don't mind as long as I keep winning trades and my group keep winning trades. I don't really care about anything else. Anyway, have a good trading week. Remember, from Monday, it's a new week. It's a new monthly candle. It's a new quarterly candle. So expect accumulation and consolidation for Monday at least, if not the whole week. So be careful. Don't try holding trades for 243 pips or 729 pips. Be conservative with what you grab. Enjoy.